Well, good morning, everybody. Bill Moore here. So we are going to today continue looking for low-risk trades in the components of the sector ETFs. We have 11 baskets. We've run the analysis with those 11 baskets using a zero point 0.8 correlation and a zero point 0.8 RW coefficient and 1.25 standard deviations away from the mean as our filters. Once we've done that, then I went ahead and ran the expectation value. I actually did it with 1.04 up and 0.96 down. Doing that, we ended up with this collection here. What is that about? I don't know, 30 or so potential pairs. I've already gone through these to look at them. We've got some of the same ones that we've already added to our list of things that we're watching. But today we're going to take a look at a new one here. This is in one of the financial baskets. This is the financial services baskets, one of the relatively new sectors. And we're going to take a look at a more detailed analysis here. So overall, it's got a nice look. It got pretty tight right through this area in here. And I'm not sure what was happening between, what was that, 2 years ago and October, a year and a half ago. But it got very, very tight here. But otherwise, it's had a nice motion. And the back test tells us that it has been outside the second standard deviation 5 times, returned profitably to the mean 4 times. And the only reason that that's a 4 is that the 5th one is currently open. So it's got a very strong track record. The most recent time, let's take it from a year ago. So a year and a month ago till now, it's got a slightly upward drift, but we can account for that, right? It's got a nice motion, it's got an upward drift, but we can account for that in our target. So right now, it has just recently crossed the second standard deviation. I think it looks good. I think I'd like to take a look at this one. So I've already added it to the observe page. That's down here. So we see everything, this one, and the nice part about this is that, as you know, I do like to wait for the trend indicator to come back in the direction that we're trading. This is going to be a short, and this one has. It's just turned back the other direction. So this looks like the timing is right to go ahead and put this trade on. Let's take a look at the hitting probabilities. We've already got this one loaded here. So we take a look here first, always, and we see the slope is down of this regression line that we have through these points, and that shows us that we have created mean reversion, which is one of the primary goals of creating these synthetic symbols. I ran the Monte Carlo simulation here. I went ahead and ran it with 10,000 paths today instead of 1,000, just for no particularly good reason. The price is currently at 22.37, and it's showing a target of 5.98. If we're just looking, as we have done in the past, for seeing whether or not we're going to be below the current value, we can run this. And it's showing 85%. Now, I think those of you who've been watching the recommendations know that this is not a particularly great number, because oftentimes we're showing numbers in the high 90s. But I think this is indicative of that shape we saw, that it's got an upward slope. So it's tending to go up over the past year and a half, and I think that's why we're not seeing such a strong number here. The expectation value is 0.955. Okay, so that is also slightly lower than what we normally try to find, but these are interesting and good numbers. One thing I wanted to show, and I was just testing it a while ago. Let's say that we were targeting put our target price in here, and we run that as a number. You see, it's only going to be below 11.59% of the time. But let's touch it here and see what happens when we're trying to touch that number, okay? So it's only going to get, in this time frame that we're of 30 days, it's only going to get to this number 17.5%. Depending what our goals are, if we're trying to get out of it quicker, we should probably alter the target price. This thing is saying that we're going to hit 5.98. It's in half the time, it's 62 bars. So as an example, we could put this here, run it again. Now remember, it's a simulation, so the numbers are not exactly the same each time. But But then we're going to, okay, we're going to do the touch thing here, 5.98. And that shows you 50% of the time, right? It shows the same thing. So that's why I was experimenting here. Let's use 13 as a target. And it's giving 60% of the time. Let's go back to 30 days and run the simulation. And it's saying 40.29, but then let's put 13 in how often we're going to touch that. You're seeing we will have touched it 60% of the time. So maybe the best thing to do would be to target something a little higher. And again, it's that upward slope we were looking at. Instead of a full reversion to the mean, perhaps we're targeting it to go from 22.37 to 13 as an example, okay? And that should potentially get us there in a little faster time. Let's put 13 here real fast and run it one more time. So it says half the time we'll be there in 26 bars or less if we're targeting 13 rather than 6. So you know, those are better numbers. This is not the strongest pair that we've seen in the ones that we're looking at, but it's a nice addition. It's a basket we haven't used yet, so it keeps our risk low. Let's make this the recommendation of the day. Our recommendation of the day is MCO minus 1.49 of TROW. It is a short, so for every share of MCO that you sell, you're going to buy 1.49 shares of TROW. Good luck with your trading.